What's going on, everyone? I've got to continue to teach the big chart. Now, for those of you guys who are newer to evolution traders, maybe you guys know about the 20 SMA, the linear regressions that I speak about, but this is the chart that I use to do a lot of my analysis on. And it's what keeps me in and out of trades. Now, is it 100% accurate? Absolutely not, right? Do I win 100% of my trades? Absolutely not. But it keeps me patient, it keeps me calm, it keeps me sane, and I can see and read through this chart pretty well as I've been using it for over 10 years. Now we've just got a lot of moving averages on this chart, right guys? So everything between the 5 through the 200-day moving average. If you start to learn and trust technical analysis by taking your bias out of the way, you're going to do a lot better when it comes to trading the markets. If you look, and I made a comment about this, and it's just kind of a funny comment. It wasn't meant to be taken serious, like we all should have been short off the first minute candle and then held all day. But realistically, when you look in hindsight, what happened, right? We should have all been short off the open. But why? Why should we have been short off the open? Well, the initial spike here, the initial spike was a trap to the long side and then had a very drastic 70-point move to the downside. Now, here's just a tip for where we're at. And again, remember, my opinions, my tips, they can change on a week-to-week basis, just depending on what the price action is doing. But for right now and this week, sit out the first 5 minutes. Allow it to shake itself out because you're going to see some really clear moves after the first 5 minutes. Okay, so opening drives, maybe change it to like a 5-minute ORB. Maybe change it to a 5-minute break and retest and then continuation. Play around with it a little bit, but give yourself a little bit of time. Give yourself a little bit of time off the open to see the bigger move. So if you notice here, the first 5-minute candle, not only is it trading below all of my moving averages, okay, it's trading below all of the very significant ones. The first 5-minute closes below the 200-day moving average. That's a big deal. Okay, that's a very big deal. It got rejected to start the session off the 50 SMA. That's a big deal, big deal. Okay, so just by knowing those two things, once you see us close below the 20 SMA, we should be firing on all cylinders. Now notice the chart here. Notice how we've got a lot of moving averages, right? A lot of supply and demand in this area. But notice how right here, there's nothing there, or this gap between the 200 and the linear regression, there's nothing until we get right here. Nothing. So for me, that's all the confluence, all the confidence that I need to make sure that I'm 1,000% short off the open at some point in time. Okay. Now look at the first bounce. It's not a significant bounce at all. It's not a bounce that really tells us, hey, we need to go long because we're going to take out all-time highs. But look at where we stopped. The linear regression. Okay, the next real significant trade that I want to point out is this bear flag here, right? So let me draw it for you. This bear flag here, and the reason being is because this bear flag broke through the linear regression. Okay, so if the linear regression acted as support once, we could say twice, 3 times, at 8:10 Pacific Standard Time, we broke it. That's significant. That's significant according to technical analysis. You have an area of support, you test, you hold, you test, you hold, you break through. The more times you test, the more times that area starts to get weak. So now that we've broken through this area, wait for the dead cat bounce. Wait for the confirmation of the new low to be taken out. Right here, 8:30 a.m. Pacific Standard Time. Beautiful short. Puts you into this trade. Now you could have scalped this very quick and clean. You could have also held this. Keep in mind, guys, use this big chart. The 5 and 10-day moving averages could be used as your trailing stops. Okay, I'm just going to say that. Notice how you break this bear flag. You get into this trade, it bounces. 21-point bounce. Scary, right? Not so much. It's below the 5 and 10-day moving average. It's below your 20-day moving average. There's nothing scary about it. The market goes up, goes down. Right? Just because the market's going up doesn't mean it's going higher. There's a very big difference between this green candle moving up or the actual price going higher. Big difference. It can move up all at once. It's not going any higher. Okay, so hold this trade. Turned out to be a fantastic trade. So just wanted to kind of make, kind of a cliff note here on this big chart. Start utilizing some of these bigger moving averages, the 50, the 200 for macro areas intraday trading. The 20 SMA is always going to be your baseline. The linear regressions, if you guys can use Thinkorswim, there should be no questions asked, right, guys? If everyone should have Thinkorswim platform, everyone should have it. There should be no excuses. You can literally sign up with Charles Schwab. I don't even think, again, I don't know, don't quote me on this, but I don't even think you need to deposit any money into the brokerage account to have the platform. But if you do, guys, just deposit $1. Deposit $1 into a Charles Schwab brokerage account so you guys can use Thinkorswim. Even if you're not going to, even if you don't trade any stocks, even if you don't trade equities, if you're going to use it for the sole purpose of charting, I would definitely recommend it. That's just my opinion, though. So with that being said, I'll see all of you guys on the next one. Stay safe, guys. We're coming to the week's end here. Don't unravel everything that you've done this week. I'll catch you guys all on the trade floor.